After decades of trying to become a titan of Wall Street and build a global investment bank, Deutsche Bank is looking to the home market. The struggling lender has announced a major restructuring plan that will involve building on its traditional strengths. Deutsche will slash around a fifth of its staff worldwide over 3 years. It's scaling back its investment banking operations and will shift 74 billion euros of risky assets into a new bad bank, as it's known. Deutsche also says it will cut some of its fixed income operations, an area traditionally regarded as one of its strengths. We've been planning for quite some time that after achieving stabilisation last year, cleaning up the balance sheet, having costs under control, we now want to take the next step, and that's to align the bank with its strengths. And that is what we're pleased to have announced. Deutsche Bank expects a 2.8 billion euro net loss in the second quarter as a result of restructuring charges, and a loss for the full year. It's Frankfurt-based Deutsche Bank's deepest overhaul in 3 decades and comes after the collapse of a planned merger with rival Commerzbank. In that time, the lender tried and failed to keep up with Wall Street's big guns like JP Morgan Chase and Goldman Sachs. Now it's time for Deutsche Bank to get its house in order at home.
Banking and finance professor Hans-Peter Burghof joins us from Stuttgart. Our financial correspondent Uli Bartz is in Frankfurt outside Deutsche headquarters. Uli, is this rocking Frankfurt?
It surely is. It's making its mark on the stock market. Excuse me, I have to fend off a pesky wasp here. And the reaction is definitely positive. It's not euphoric because people know that it's not a given that all these promises that Christian Sewing and the supervisory board chairman are making are going to be right in the end, and that everything is going to wind up as they say. But I think most people agree that the costs are much too high at the Deutsche Bank. It has to do something with the size of the staff. Investment banking, a star in the past, reaping tremendous profits, but a shadow of its former self, and also having all sorts of legal costs that it brought to the bank. And I think most people think that this radical approach is the right one, coming very late indeed, though.
Well, you keep that wasp at bay. Mr. Burghof, I read a quote of yours this morning. No sympathy for the investment bankers losing their jobs. Why?
I think, there's a lot of sympathy for investment bankers as human beings, but for sure they'll find a job. Investment banking is still alive and kicking around the globe. It's only not for Deutsche, because Deutsche always has been kind of outsider in this business. Investment banking in London and New York is Anglo-Saxon style, and okay, they bought investment bankers, Anglo-Saxon style investment bankers, but seemingly they didn't buy the best ones, and these people maybe haven't been very loyal.
They're not the only ones going, though, where we've got, what, 1 in 5 staff being thrown out. It sounds like there's something systemically wrong with Deutsche, and that would be management's fault, not their fault.
Not the bank manager's fault, for sure, not the investment banker's fault. But, I mean, they fought for power within the bank. And they took over, to some degree, the bank, and somehow the Deutsche Bank lost its old strengths as a reliable partner to big companies in Germany. And this loss is really big, and now they try to regain this position. It will take a lot of time, a lot of persuasion to get back into this position, but it's very valuable because the German economy is thriving. It's a strong economy.
Exactly.
A good bank could live on that.
Uli, will that be enough, though? Will Deutsche Bank stick around?
I think Deutsche Bank will stick around. Will it stick around under its own independent leadership? That depends on the success of this radical restructuring. It's always possible, and some people think that it indeed is likely that at some point, considering the low share price and the financing and the big balance sheet, that it might be taken over by someone. But its role in financing both private customers and especially corporate customers, like Professor Burghof just pointed out, yes, it's lost some ground there, but it still is #1 in Germany. It's needed for many companies. So that role, I think Deutsche Bank will continue to play. In what corporate structure, that we have to see, depends on this program.
Just briefly, Mr. Burghof, and finally, the bank's no stranger to scandals. It even lent Donald Trump money when no one else would. Actually, one tweet I read this morning was that if Trump repaid all the loans he owes the lender, it wouldn't have to cut any jobs at all.
That's absolutely wrong. I mean, Trump is not that important. The volume isn't that big. I think Deutsche Bank can do very well without Trump. It would be better off without the loans to Trump, but it's not really relevant for the business of Deutsche Bank.
Mr. Burghof, thank you very much for chiming in from Stuttgart, and Uli Bartz for us in Frankfurt, outside Deutsche Bank headquarters.